Hi, Ron. Stu here again. It's non-farm payroll. Yes, again. It comes around really quickly, doesn't it? First Friday of the month. It's 7th of March. It's been a cracking week so far for our trades. Hope you're having a similar run this week. Stocks, big lump are down again yesterday. Dollar continues to be under pressure. This is the, you see the chart here. This is the euro on the hourly chart against the dollar. The blue line is the big, my favorite moving average, the 21 EMA. You can see here RSI moving into the overbought area, coming back down again, but still remains bid. The MACD signal line crossing down here, moving higher. I don't know if you can see that very well, but we're moving up, and it's the same against all the other major currencies. So we've had a good one against the dollar this week. Sterling 129.15 at the moment. And the yen 147.75 continues to decline, and we're in the money on all those trades. Aussie dollar less so in the money. I think it's out of the money at the moment, the trades we took overnight this week, but we'll update all of that later on to a day when we wrap this up. But as I say, let's put the caption on. Let's put that on. That's not on me. There we are. And it's been pressured on the dollar. I mean, the noise, the news has just been swirling around. It's been swinging from tariffs are on, tariffs are not on, tariffs are on the 2nd of April. Crypto, yeah, it's going to happen, but no, we're not going to buy any more. We're just going to use all the stuff we've confiscated. Crypto's collapsed out of that 92 channel for Bitcoin. All sorts of stuff going on, as you might expect in a Trump presidency. Stuff swirling around all over the place. The Chinese batting back against against Trump overnight as well. Their chief diplomat. He's a very forthright sort of guy, Mr. Wang. He's very direct, and he continues to be direct in his not pulling his punches against the US. What did he say? I've written he talked about US being two-faced. I remember making a note of that. I think, dearie me, yeah, two-faced. So we'll see how all that pans out. We've had relatively good economic data this morning. This is, where are we? This is Friday. Let me just let me make me a wee bit smaller so you can see the screen a bit bigger. There we are. GDP out the Eurozone area, better than expected. Remember, GDP is backward looking, but everybody understands what it is. Gross domestic product, or gross national product as it used to be. Stuff, services and goods made in that area. So the EU area grew at 0.2% for the final quarter of 2024, and a year-on-year basis 1.2%. So a little bit better than what the ECB and Ms. Lagarde were predicting yesterday. Obviously, the main news today is about to come in 7 minutes. This is here on our calendar. Average hourly earnings, the headline payroll number, participation rate, the wide unemployment number that when I was to look at, the U6 rate. So lots of data to come. And also the Canadian jobs numbers expected to shrink quite significantly from last month to less than 20,000 from 76,000 last month. So dollar CAD maybe a bit of a move on that. Plenty of speak to come from the central banks as well. We've got Mann, Bowman and Williams, Mann from the Bank of England, and Bowman and Williams from the Fed. And then we've also got the big speech of the day. Mr. Powell has got something to say. So we got payrolls, we got Powell, we got participation rate. So there we go. We got alliteration of P's for our first Friday of March. So any chat, any markets you want to have a look at, please let me know. But as I say, dollar's weaker going in to payrolls. It's due at the bottom of the hour in 6 minutes. So let's have a quick run through the charts. This is just I've cleaned off. I'm using the demo profile at the moment, so it's got the rate of change. I'm going to do a rate of change webinar. It's a really forward-looking indicator, and it does what it says on the tin. It's a momentum indicator. Anything above 0 is improving. Anything under 0 is declining, and then the rate of slope of the line is quite key as well. But webinar on that. I think it's next week. I can't remember when we've got it scheduled. Abo, you're asking about the euro. This is the euro, my friend. Sorry, it's not. It's the Aussie. This is the euro. It's bid. We've been bid all week on this. We're very much in the money on this one. Huge 3 days. Firstly, it was the anticipation of more defense spending from Germany. sorry, from the wider EU. That was agreed this week. Then there was a big changing of the rules for fiscal spending. That means how much governments can spend within the rules of the EU. That's been ripped up and chucked out the window somewhat. So that's lifted the euro. And here we are, 108.50. We're at a 4-month high, as you can see. I look to the left. When we were last up here, this took us all the way back to the 5th of November, when the euro dollar was this high. What was the 5th of November? It was election day in the United States. So all the gain, the dollar, or the loss that the euro's seen since election day, when we were down here under 102 here at the beginning of the year, when everybody was talking about parity, that's been turned on its head, principally because of the policies of Trump that he's followed through with. To be fair to the guy, I never thought I'd hear myself saying that, but anyway, to be fair to the guy, so 108.60. I don't care what moves market, as long as I make money. And so volatility is great. So it's just got to keep it in check. But we've had a really good week long in euro dollar this week as well. So lots and lots of pips in the bag, and lots of the pips will be put to bed tonight. Fingers crossed, everything moving forward. So I'm going to keep all the positions open over the non-farm payroll data. Remember, these are end of day positions I take every night. So the noise of the data each day, yes, it can move us around if the stop loss has got too tight. It can take us out of a long position, a bit like we had with the indices. But that's trading, my friends. We bag the profits, we accept the losers, and we move on to the next trade. So euro is moving higher. The daily is higher. So that's the trend you want to be looking at, Hassan. So if we go down the time frame, so if we go down to the 1 hourly chart today, well, it's been positive, hasn't it? Where's today started? We started around about here. Where are we? 7th, you fool. It's here. So this is the beginning of the day. So we're at the high of the day, aren't we, at the moment? So we're biased to the upside so far ahead of the end non-farm payroll data. We're above the 21-hour moving average, which sits at 1.1. 1.1. Sorry, 1.2. 1.100. So here we are at 108.60 at the moment. So we're moving higher in this hour as well. And so obviously this lower time frames will have been twisting about a bit. So if we look at the 15-minute chart, we've rallied. That's our high of the day. That's what you want to be putting in. That area will probably get tested at some point as the data comes out in the next 3 minutes or so. So that's the area. 107.10 you want to be looking for. Are we going to push through that, or are we going to run to it and then bounce from it? Who knows? Here, if you're a 15-minute trader, you've been long all morning. We've rallied here. We've come back down. Looked like we were going to go low. Didn't happen. We're back over it again. So the 15-minute guy is also long from 12.45 for using this approach. What's the rock telling us? Well, the rock is saying we've sort of run out of steam. We've come down quite aggressively, and now we're flattening out. So we're just waiting for the data, which is fairly typical. There's been all sorts of data out there. Normally it's quite quiet ahead of non-farm payroll, but we've had that massive sell-off in the stocks yesterday. US stocks were down significantly. The Dow lost 1%. We were at 42,427. We were further down than that. The wider NASDAQ, my friends, actually went in. I don't know if I've got time for that. Went into a contraction zone. So contraction is when we are 10% down from our all-time high. So if we look at the NASDAQ, I haven't got the broader NASDAQ on here, but if we quickly go to the NASDAQ before the data comes out. The NASDAQ has come down from these highs from December and January. So we're now down 10% from that high. And as you can see here, the moving average has kept you well on the right side of that move low. It's been under its 21 moving average here since the 21st of February. And some big daily down days. Yesterday was a big down day for the composite NASDAQ. Composite NASDAQ was down at 18,069 on close, down 2.61% on a single day. It's one of its worst days for a long time. The S&P, the more important, was at 5,738 on close. So the trends on these daily timeframes for stock markets remain very much the downside. If I just flip it back to my standard layout where I've got those levels marked, you can see there's the NASDAQ coming in. I'll mark this up on a chart this morning. There it is. There's that key next cluster level here at 19,960. So that might get tested. It got tested yesterday, might get tested again today on the data coming out. So the data's just rolled over. Let me just update my site here, and non-farm payrolls coming in more or less as expected, 151,000. Unemployment's ticked up again. So the story of the softening of the jobs market continues to fill. Let me just update our calendar here for you. So 141,000 from 159 to 60,000 expected. So it's more or less in line. Last month has been downgraded to 125,000 from 143,000. Remember the month before that we were in 200 odd thousand. So we are sort of moving to the downside. If I show you. I can show you the Forex factory calendar with the candles on there. If you see, if we move this to today, so there's today's coming at 151,000. You see the trend is sort of eyeing to the downside, isn't it, for 2024 and 2025 certainly. So January, February, March numbers all around this 140, 150 number. It was expected to be a bit high, coming at 151, so it's a miss, not a massive miss, but the downgrade for last month is another 20,000. Obviously, everybody's talking about all these job layoffs that Mr. Musk is creating in the government sector. A lot of those people are still, they've accepted it, but they're still on the employment of government until September. Obviously, there's contractors that the government employs, the US government employs, like lots of governments around the world employ. That's more difficult to tally simply because they're self-employed. A lot of those are self-employed people. But it's as far as the data is concerned, it's more or less in line. Unemployment is ticked up, and the jobs is softer. So it's adding to this story we've been seeing. If we just go back to our calendar and I update it, you see there's more detail on our calendar here. Friday. Fridays down here. I've got all these companies not really interested in, and it takes me a while to get there, doesn't it? There we are. So headline 151. Participation rate dipped as well, 62.4%. That's key. Oh, look at that. That will pull me in. That's pulled me in. 8%. U6 back to 8%. That's going to weaken. I might actually spike the dollar actually, because it might push the Fed to push it further out and leave things as they are initially. So let's just have a quick look how we have reacted to that. The Nasdaq here on the 5-minute chart. Nasdaq has rallied. Whoops. Actually, it's got the indicator. The euro, that's what we were talking about before. So interesting, yeah, it's sort of a mixed bag, isn't it? We went high to 108.80, so we did create a new high of the day, but we immediately sold that off. We went below this 108.46 level, and we were at 108.43 at one point. So it's a bit of indecision, very much indecision on that mixed number. Treasuries themselves, the US Treasury is key leader. The 10-year is at 427.90. 427.62. So treasuries have come back a wee bit. Dollar's weakening a bit, as we can see here in this first few minutes of the data getting absorbed by the market. But interestingly, here on the euro, this is our day. Here's the day started back here. So we're testing this low of the European session down here. So we bought down here, or there's been buyers down here at 108.42, and we're trying to push higher currently on that immediate reaction. If we just go back to the other chart that we were using, and put the high on there, as you see. Do we measure the? I thought we'd marked the high. Yeah, there's the high we've ran to. See the high we talked about before. Hasim. So we've ran straight to that as ahead of the data. Sorry, it's the daily time frame. So we've ran through that high of the day. That's the key thing to look at. So 108.80. So we're moving higher again. So the dollar's weakened. The 10-year has spiked up, but it's coming back. It's lost a bit this morning. I say it's back to 425.13. I've just got the Bloomberg on the TV over here. So yeah, that's a weaker dollar one would expect on that. So Aussie, we may be back in the money on this one. No, we're still out of the money on the Aussie, but Aussie up 63 63 has been recovered again. Sterling is back over 129, a big leap up. We were holding down into 129 ahead of the data, and then we tested lower. So in this immediate aftermath, dollars weakened, and in this first 5 minutes to the upside. So sterling, we'd look to try and push to the new daily high, 129.45. We didn't on the data coming out, so that suggests there may be some weakness if we do get up there. So upside target 129.40, 42, something like that for a high of the day for sterling. Aussie, we did have a look at CAD. I haven't actually looked at the CAD data, but there's the indecision. Dollar still bid here against the Canadian dollar. But let's have a quick look at the Canadian data as well. So the thing that's pulled me in is that wider measure of unemployment, the U6 level here. It's only got two bull's heads here on investing.com, but that's a significant number. Not only has it gone up significantly from 0.5 of 1%, a whole half a percentage point, it's gone back to the psychological 8% level. So we are back up. Payrolls, private payrolls, 140,000 compared to 140, so it's more or less in line. And as I said, the numbers of jobs is more or less in line with what the market is expecting. It's perhaps the tick up in unemployment. The weakness of it's only 2 ticks this, but it's adding to the same story. The participation rate falling, and government payrolls, as you might expect, to be weaker, but down by 40 to 11,000 from 44,000, even though that's gone up over the seasonality of from 32,000 before the Valentine weekend. That's when that's when Musk and his Doji crew started chopping around and taking jobs out. So it actually went up before it's come back down. So this measure, the non-farm payroll data, when this was counted, was before all of this government shakeout jobs started. So it's still not picked that up. Obviously, it's going to be April and May's numbers, and certainly the September number will absorb all of these guys that have taken redundancy now, but not actually leave the government payroll until September. They're getting paid until September. Long-time civil servants in the US. And again, it's not just in the Washington area. It's obviously the US government employs people all over the country, or the US. Anyway, that's the jobs and numbers and the interpretation of it. So unemployment ticked up. Payrolls headline is missed generally, but it's more or less in line, and participation rate is a bit weaker. But the wider U6 is the thing that's really spiked my attention, and the work week is more or less in line with what was expected, 34.1 as well. So earnings, yeah, it's gone down previous month, didn't get to where we were expecting. So again, that's more or less flat and in line. The monthly earnings, 0.3 of 1%, also in line with expectations. So it's a softer jobs number, finally, really, is the take-up of that, as we saw quite nicely on that when we looked at the headline here. Where's my the little chart here we get on Forex Factory? Where's this one here? There we can see it's sort of the softening continues. That was an outlier in November because of the storms and the strikes, but you see it's generally trending a tad lower. But it's still a very robust economy. The consumer is hanging on. So next week's, the consumer sentiment, consumer expectations, if that starts to slip as well, that's when there'll be more, even chatter of recession being chatted about. But we'll see what impact that's had on expectations for the interest rates as well. But generally, my friends, it's been it's a weaker dollar on that. So if you're looking to buy these long positions that have been in play this week, that's still set. The non-farm payroll, my assessment of what's happened is the non-farm payroll data softer hasn't impacted the softening we're seeing in the US dollar. How long that continues for, I don't know. Scott Bessent, the Treasury Secretary, this morning was talking up our policy is still a strong dollar. That's not really true, but anyway, he's saying that's what he wants publicly. I remember Trump talked about wanting a much weaker dollar, but he's yet to wade into the Fed and Mr. Powell, who we did appoint, remember, on a face-to-face basis. But anyway, see what Mr. Powell has got to say later. Interesting Friday, interesting non-farm payroll. Normally, it's only the politicians that come out, both the government and the opposition, the Democrats, after non-farm payroll day, but it's very unusual. We got Mr. Powell speaking as well later on, so watch that. So the upshot is we remain long on our short dollar positions, if you see what I mean. Euros spiked to the day. We got a new high, 108.88. I think that's where we were before, wasn't it? Because I've got these different profiles on. I forget, some of them haven't got the lines on. So that's that 88.88 high post non-farm payroll for euro today. So what Mr. Powell makes of that. But again, as you can see, we're still bid over the 21 EMA. The MACD still bid, and the rate of change has moved up quite violently. But you'd expect that on the shorter term time frame, this 5-minute time frame, given the nature of what it is. But it's still, again, that's positive to the upside. May have run out of steam perhaps, but we'll see. Coming back to the previous high today, which is quite interesting, see if that holds. That'll be interesting as well. On that 5-minute traders for euro sterling, down a bit as well. It's off that 129.30 area, 129.28, and the yen 147.30. Again, continuing to move to the downside. So we're very much in the money on that one. Hasim, anything else you want to have a look at? Let me know, my friend. Anybody have a look at? I'm going to go on to the other assets as well, obviously. Let's have a look at gold, 290.22. So that's actually gone back up from a move lower ahead of the data. So we were drifting down here. We've been drifting down all day. If we've got the hourly chart. Sorry, we sort of channel bound all day, I should say, having not gone anywhere on the daily time frame. We were long this, weren't we? The other, I think it was yesterday. Was it yesterday or the day before? I can't remember. But I took a spurious long with a stop loss down here somewhere, 28.50 on the other. Which show you the other layout. It was on this one, wasn't it? So that's our entry here. We're now back in the money. We've been out of the money quite a lot since we took that. Let me show you it's obviously just on the 5-minute time frame, but this was an end of day position we took on gold here on the 4th, and it didn't go anywhere. Went down. It's closed down yesterday. It's Sirius wasn't going anywhere. We're still supported by the 20-day moving average. So that's good enough for me. We tested it yesterday. We've been down to test it there, and we're positive as well. So that trade from the 4th, the night of the 4th, after 2 days, is finally in the money. It doesn't look like it's going very far. We'll have a look at what that looks like on the end of business today, because it's an end of day position. See if we can bag some points for the week. We're sort of flat at the moment for the positions I've closed. We lost 141 points on Monday, and Tuesday. Nothing was closed on Monday. Wednesday, Thursday, yesterday we're actually minus 6 points currently with the open positions, but we are in the money on the open positions as well. So it looks like a positive week again for my end of day positions. Remember, guys, I put them up here on the Discord channel every where are we? Trading strategies here. Under here, this is where they are. Trading strategies. Every night I'll put end of day trades positions, typically 30, 40, 60 pips I'm looking for in the next day or two after the trade has been filled. But yeah, a lot of these short dollar positions, so we like long euro dollar, long dollar Swiss, long short dollar yen, are all very much in the money. Some of them have already hit target ones. I'll update the details of it all over the weekend. There's a couple of losing trades. Some closed. Someone hit a target and then came back to entry. I mean, that's what happens. So we had 50% a winner, and then the rest was flat because it closed it because I'd moved the stop loss up to the entry. But we'll have a look at that. I'll put that up on here. So trading strategies on our Discord blog. Do follow us. I say we're here to help you become the best trader you can. So let's just go back. So gold's a bit positive. Silver, somebody was asking me about silver the other day. A bit more positive than gold. Excuse me. 32.50 at the moment for silver, sort of positive. Again, all-time highs. We're back here at in October as we went to plus $35 for silver. So we haven't recovered. We haven't moved back there for silver. Gold's been much more of an outperformer, given all the geopolitics that's going on. So yeah, see what very interesting what Powell has to say this afternoon. Cryptos, as I'm sure you all know, crypto trader 90,000 where Bitcoin's back to now. The anticipation yesterday of the crypto summit, which is today, it's actually kicking off now as the non-farm payroll data came out bizarrely. But the advanced leakage was that there's going to be no new purchases of cryptocurrencies, particularly not Bitcoin. And the other three, Solana, I can't remember the other ones, XRP, wasn't it? And there was another one as well, Ethereum, I think it was, wasn't it? There's going to be no new purchases of that, although they are committed to making, you know, and I'm sure that's what the rhetoric will spin, that making the US the crypto capital of the world. However, the market's not very happy with it. The expectation was it got ahead of itself again, but look at these three big wicks here. Over the last couple of weeks for Bitcoin into this 2025 low at 78,000. Then he announces this strategic reserve. It's disappointed in the detail, which a lot of Trump announcements always are, but it's the nature of the showman, I suppose, nature of the man himself. And off we go. So the 20-day moving average, as we've said all this week, we are now back under that key 92,000 channel, which remained a big support area for a long time. And remember, my friends, the longer something goes sideways, the bigger and the more aggressive the breakout can be. The only thing I would say is that the breakout hasn't been significant. It's been coyed. Yes, we went to 78,000, but it hasn't followed through. So interesting where we go from here. To go bullish again, we'd need to place a significant time and break over the 20-day moving average, but more importantly, the 50-day moving average now sits at 96,800. The 21-day is at 91,000. So we need to be back into this channel and holding that channel, and then break over the 50-day if we're going to move higher and test new all-time highs as we go through March. At the moment, we are biased to the downside. We've only had that one day, that big up day there from the 2nd of March, which unfortunately was engulfed and taken out the following day, a much more negative candle than the positive candle we'd had the day before. So we do really need to break over the 20-day if we're going to move up to the high side for us technicians. But we'll see. As you can see, there's a bit of a dodgy trend line there on the wicks of the day. Don't hold too much sway on that, but basically we are biased to the downside, so pressure could be back to test this 78,000 level for Bitcoin. So let's just have a look at what the markets, the futures markets, this FedWatch tool is now anticipating as far as the Fed changes are concerned coming into post payrolls. I don't think it will have changed very much, to be honest. So nothing in a week or two on the 19th of March. When the Fed meet on that Wednesday, so that's nailed on. May is probably still, it's come down a wee bit, but still nothing really likely to happen in May. It's only a 50% chance of a change of a cut of 25 basis points. So we got 45 and a 4% chance of a bigger 50% basis point. The data doesn't look like that's going to happen, but it's still, May the 7th is still quite a way away. The data could deteriorate quite quickly into that, but it's more looking like by June we will have had a cut 50% more that we've got a cut, and then July possibly another cut then, but that second cut might be getting kicked out to September. So not a great deal of change on this one. Let me have a look at the June one, see if that's changed significantly from yesterday. Not particularly. There goes the 36.8 to a 34.7, 3%, 2.3% chance of no change. Sorry, all the way down. What am I talking about? It's this one I should be looking at. 10% chance for no change compared to a 13.8% or 14%. So quite a significant change for the June data. But I'd say that the rate cut now is getting pushed further out into the year. So that may see a slowing in the decline of this dollar trend we've seen. However, the yields have spiked on that payroll data. Mr. Powell is due to speak at 5:30 my time. I'm not sure where he's speaking. Due to speak at the Economic Outlook at the University of Chicago. So he's actually in Chicago about US monetary policy forum. So it's right on subject. He'll be obviously, I didn't say there's questions and audience questions expected. So he'll be questioned about obviously the impact of Trump, no doubt, being in Chicago. But it'll also be questions about obviously the outlook for the rest of the year and into 2026, and whether we want to stay on in the position. I'm sure that's going to come up soon. And Trump is also scheduled to speak later on tonight, 8 o'clock. He's due to participate in the roundtable about the cryptocurrency. So the summit concludes, and Trump will obviously have his say later on tonight, 8 o'clock London time, GMT time. 18 10 o'clock. The other thing to bear in mind, guys, is that over the weekend we had, it's not actually on here, but over the weekend the New York, North America, so Canada and US markets, they go into their summertime, so the clocks go forward. So normally where we have data getting released at 13:30 GMT is now going to be 12:30 GMT. Sorry, doesn't change GMT. So where it's normally 1:30 GMT, it's now going to be 12:30 GMT. So next week we got the Bank of Canada, we got the JOLTS report on Tuesday. So instead of being at 3 o'clock, it's coming out at 2 o'clock server time. Inflation, the headline next week is really the US CPI report on Wednesday, but we've also got the Bank of Canada with a rate announcement on Wednesday. Is also a busy day on the 12th Wednesday. CPI from the US, is it continuing its cooling path? We'll find out on Wednesday. Is it, how much stickiness is still left in it? And then not as important, but it's becoming more important these days, is the producer price index, the following day on Thursday, same time, 12:30, not 1:30 this for the next couple of weeks, 3 weeks to the end of the month. And then on Friday, the sentiment numbers from the University of Michigan, consumer sentiment and inflation expectations from the very highly regarded University of Michigan Business School, which is where Mr. Powell is this evening. So yeah, what a week! What a week! News flow all over the place. Obviously, the geopolitical issues on top of it all. The situation in Ukraine. There's this meeting between Ukrainian representatives and US representatives again in Saudi. Saudi becoming a bigger player on the world stage, which is exactly what the prince wanted after he killed Mr. Khashoggi. But he's getting more and more presence. The other, we don't actually, I can't show you the dollar index on here, but the dollar index has just absolutely collapsed. It's not only the strength of the euro, we've got a really, really strong Swedish krona. I don't know how many of you trade the Swedish krona, but it's had its best week for as many years as I can remember. It's up nearly 6%. And that's because lots of Swedish manufacturers like Saab and Volvo and other Swedish companies are very big into the military expenditure as well, our military manufacturers as well. So they've benefited extremely well, the Swedish krona, on the back of this expected purchases of defence spending from the European countries. So yeah, let's just there we are. Let's just a wrap up of where we are. So euro 108.65. So we're off the tops we had. Let's just go back to the 5 minutes. We did go to 88, didn't we? We're down again the last 20 minutes. So it's given up most of its gains post payrolls, but we're still bid. So some profits might be getting bagged for the weekend, and obviously perhaps ahead of Powell as well. But certainly it's still a bid market for the euro dollar. Sterling also down back to the 129 level again now. Let's just put the template on that we to date. So the daily was on 5 minutes. We come back to the 129 level again. So again, euro holding up better than sterling. So dollar back in the saddle, and we're back under the 21 here. So initial positivity, didn't get to a new daily high. That was the first suggestion. Big indecisive candle at the top. Then we were down, and we've been down for 15 minutes since. So we'd like to see that hold of that floor there, 129.05. That breaks, we'll be into 129, and we could go back to the lows here this morning in the early European session when we were down at 128.80. So perhaps another 20 pips to the downside. If that continues to unwind, we're likely to certainly pause, certainly at least initially at the 129 level. To the downside, we may recover ahead of that. As I say, there's no more major data obviously to move things. So dollar initially weakened on that data. It's been absorbed, given that the headline was more or less in line. The wider U6, not many are drilling into, but that's certainly for future reference. That's certainly quite a miss for the unemployment, or wider measure. Remember, the U6 is a big wider measure of unemployment than the U3 headline number, which is still did go up itself as well, but only by 0.1% to 4.1%. So generally soft data from the US, and dollar weakened initially, but it's now back to where it was basically. I mean, how many non-farm payrolls do you see that? And here for sterling, for instance, we went from 1 to 129.40, we're back to 129, so 40 pip range up and down in a space of 25 minutes since the data came out. Fairly typical non-farm payroll day. So don't get caught out, my friends. Don't get caught buying it here and selling it and trying to sell it down here so far today. I mean, I'm sure a lot of people have been caught out like that. It happens all the time. So stocks have come back to life today. Not really, I don't think. Again, another lift, and then they're back again as the dollar's improving. So the story continues to be the weaker stock market. And again, we can't here on the hourly basis. We've been under the 20-hour moving average since early yesterday. Big sell-offs yesterday, as I said, and we're weak again today so far. Yesterday's low took us to 1991.80 here on the Nasdaq 100. The S&P 500, same chart, same setup. Yeah, you can see weakness, 57.18 to the downside, 57.18 to the downside. Needs to break and hold this 20 period moving average. We're going to move up, and the Dow, best performer of the three, still weak. It was down that 0.99 of 1%. Yesterday's low took us interestingly into when was that? That was Tuesday. Tuesday's low as well. On the 4th, down there at 42,376. So stocks continue to weaken. Looking for a week. We've had a very poor week. If we just look at the daily time frame, just use the Dow as an example. It's been a very poor week. So this is 5, 4, 3, 2, 1. Mondays. So Friday's close. We opened up here at 43,800. And Monday, Tuesday, Wednesday, Thursday, Friday, we're down here at 42,470 at the moment. So it's been a bad week for the Dow and all the other stock markets. If we just got the weekly, you can see what I'm talking about. The size of the candle this week compared to the last 6 weeks or so. Last big candle bigger than this was the big up week in the middle of January, and here we are in the middle of March, 2 months later, moving in the opposite direction. And that week we went down to 41,780 for a low of 2025. So obviously all those numbers are now in place. You can see the weekly MACD is continuing to weakness, 3 weeks, and the RSI, I think we mentioned this earlier in the week, didn't we, and now under the 50 line and pointing down as well. So stocks weakening now that all the earnings data is in and being absorbed, and the impact of the tariffs, particularly the rhetoric between Mexico, Canada, and obviously particularly China. Another 10% on China this week is increasingly getting more frictious. But we have still got all this volatility. Trump swinging around. Yes, they'll be on. No, they won't be on. They're only on some of them. They don't come on until the 2nd of April properly. But that's when all the reciprocal tariffs will be on all the countries that we do trade with, everything from South Korea to China to Japan. The UK is probably going to get captured up in that, and that, as well as rounding up the EU, obviously, and all its other Latin American traders as well. So, yeah, there we go. World in a volatile Trump 2 presidency. So, let me leave you with the euro. I'll leave you with gold. Everyone's favorite. Let's start with gold. 29.12. We are up for the week here for gold, having had quite a significant down week last week. We are got to the date. We are flat for the day, having been down yesterday and not going anywhere on a Wednesday, having had a good Monday, Tuesday. So we are up for the week. See if we can hold that 21 day moving average as we go into the weekend. And again, if we just go back to the 5 minute, it's probably given up its gains post data. It's in fact it's given them up and less. So dollars coming back quite significantly against gold here at 29.06 at the moment. So there we are. We're still half an hour away from the stock market open, but we're still 150,000 US jobs created. Nothing to shout about, but nothing to worry about either in that sense. But certainly signs of cracks in the jobs market, particularly a bit of weakening in the jobs market, which has been anticipated for quite a while. Watch that U6 of employment was my takeaway from today's data, and the participation rate and the utilization rate as well. So anyway, be good, everyone. I will update our trade positions on the Discord group later on, but certainly looks like we're going to be in the money for another week. And yeah, another good trading week, or good trading week in the sense of following our rules, taking our losses, bagging our profits, and letting our profits, positive trades run. So take care. See you all on Monday. Monday will be, I think I might be doing the rate of change. Is it tomorrow? Is it on Monday? Maybe. I can't remember off the top of my head. Hasim, if you're still here, or anybody else, Abu Bakr, anybody else, before I go, let me know. If not, I hope you got the right side of that euro move and didn't get caught out right at the top there. But until I see you, have a nice weekend, stay safe, and love to your family, everyone.